Hello friends, in the series on the income tax cases, today we will discuss a matter which is very common nowadays, and that is that the CPC is making a number of the disallowances by picking up the figures from the tax audit report and making disallowances. The concept is that the CPC should give proper opportunity to the assessee to explain the items, but it has been seen that in many cases direct 143 subsection 1 order is being passed for making the disallowances, and even if they give the assessee the time of 10-15 days to explain its case, even then whatever the submissions the assessee are giving, the CPC is not considering them and making disallowances, due to which a heavy demand is created on the assessee. So in that case, what is the remedy to the assessee? What steps the assessee should take is well taken care of by this decision in the case of Anand Dilip Bhai Patel versus Income Tax Officer. This case has been reported in 113 ITR short notes 44, and the matter has been decided by Honorable ITAT Ahmedabad bench, SMC bench, and the date of the judgment is 25th June 2024. In the present case, for the assessment year 21-22, the CPC observed that the tax auditor of the assessee has shown 5 items in other income, and those 5 items were interest on fixed deposit, interest on saving bank interest, dividend, interest on post office deposits, and long-term capital gain. This was only for the reporting purposes, and that too because these items were not related to the business income, these were other income. The assessee has already taken all these amounts into his computation of income, and this was only for the reporting purposes by the tax auditor, that these amounts does not relate to the business income. But the CPC, without appreciating the fact that these amounts have already been taken into the income of the assessee, made the disallowances. The assessee do not have any option other than to go to the CIT appeal, and when the appeal was filed, the CIT appeal observed that out of the 5 items, 4 items were exactly having the same figure which were reported in the tax audit report by the tax auditor, and whatever the income has been offered by the assessee in respect of those 4 items into his computation of income. So the learned CIT appeal deleted those disallowances in respect of interest on fixed deposit, interest on saving bank interest, dividend income, and interest on post office deposits, because the figure was exactly the same. But as far as the long-term capital gain was concerned, the CIT appeal observed that the long-term capital gain offered to taxation by the assessee was 2,62,000, and the amount reported by the tax auditor in the tax audit report was 2,53,000. So there was a difference of 9,000. The 9,000 was reported more by the tax auditor. So maximum the CIT appeal should have added the difference, that is 9,172 into the income of the assessee. But in spite of that, the CIT appeal retained the total addition of rupees 2,62,000 into the income of the assessee by saying that this amount doesn't match with the income reported by the assessee. So for this disallowance, the assessee has to file the appeal to the tribunal, and when this matter was heard by the tribunal said that in the present case, the maximum addition which can be made in the case of the assessee is that the difference amount between the income reported by the assessee and the income reported by the tax auditor of the assessee. And according to me, in that case also, the proper opportunity should be given to the assessee that why the tax auditor has shown 9,172 more into the tax audit report. But because the amount was less, so the assessee was not bothering about the quantum of the addition. So majorly the relief was given to the assessee by the tribunal. Friends, from this case, although the assessee got the relief, but it is very painful that the disallowances are being made by CPC without giving the proper hearing to the assessee. And according to me, there should be amendment in the act, and before making the disallowances at the CPC level, a proper hearing should be given to the assessee so that he can explain that he has shown all his income into his computation of income and the disallowances should not be made. Because once the order is passed under section 143 subsection 1 by the CPC, the assessee has to file the CIT appeal, which is being kept there for number of years. And even then the same situation is there because the CIT appeals are overburdened. So sometimes it happens that they are not able to understand the matter because of the complexity of the matter, because they have to read the full tax audit report and then they have to see that whether this income has been shown by the assessee. So at the CPC level itself, if the opportunity of personal hearing will be given to the assessee, then the litigation can be reduced and there will be no need for the further Vivad se Vishwas schemes, because a number of the matters are there which even do not need the time of the tribunals or the courts, and by this we can reduce our litigation also. At the end of this video, once again I am repeating the name of the case. The name of the case is Anand Dilip Bhai Patel versus Income Tax Officer, and this case has been reported in 113 ITR short notes 44. The matter has been decided by Ahmedabad ITAT SMC bench and the date of the judgment is 25th June 2024. Thank you, friends.